Hello and welcome to Currency Call. Let's start with the euro, which has declined broadly across the board today. The European finance ministers meet in Poland and failed to calm fears at a Greek default. Investors are also worried that the debt crisis will spread to larger eurozone nations and the region's banks. The euro has declined and the pressure is expected to stay on the single currency. Right now, you're on your screens 1.3670. The dollar has marked gains in the meanwhile, edging higher against the Japanese yen and the Swiss franc. The dollar index is right now at a 7-month high. Investors are watching for the 2-day FOMC policy meet starting tomorrow, and there are expectations that the US Fed will take further monetary easing measures to boost the economy. The Fed may also increase the maturity term of its debt holdings. The possibility of a third round of quantitative easing, though, is seen as very low. Commodity currencies have come under pressure with the sell-off in the financial markets. The Australian dollar, New Zealand dollar are trading on the lower side. In the Asian markets, the Indian rupee stayed weak in the afternoon trade, falling more than a percentage point against the dollar. The debt concerns in Europe, reduced risk appetite and weak domestic markets weighing on the rupee. Investors have continued sell-off in the South Korean won and the Singapore dollar as well, and we have seen most of those Asian currencies decline. Let's get in our guest then. Abhishek Goenka, CEO, India Forex Advisors, joins us in Mumbai studios with his take on all of those currencies. Abhishek, hi, welcome to the show. How do you look at the Indian rupee? 47.26 of a closing on Friday, and then we are down 1% from those levels yet again.
I think Indian rupee 47.26 was merely a technical correction if you look. It was a policy day for the RBI, and a technical correction was very much due. That's why we saw 47.26. But I personally feel that, in the previous shows, one of the shows we talked about a double bottom formation in dollar rupee, technically, at 44 levels. Now, whenever this kind of a movement happens, at least 10 to 12% is what we see in the market on the reverse side. So technically, I think rupee is still heading towards a 48.5, maybe a 49. Because the reasons are many. Number one is that at this point of time, we are running a huge current account deficit. That's number one. Number two is that definitely, if you look at the history, that when these people actually invest in India, when they see the currency, the interest rates and the domestic markets all lucrative. Now, if you look at the currency, it's at 48. Probably if it heads towards 49 or maybe 50, that's the time when the currency would start looking very lucrative for the international investors to come back to India. So that when they invest, they get 50. When they take back, they get 44. Or I would say interest rates, they're expecting that finally when the RBI peaks the interest rate, that's the time when they're going to invest in the securities in India. And in the stock markets also, I think probably at 16,000 may not be the lowest level, maybe we hit 14,500, 15,000, that's the time when the stock markets are the cheapest. Sure. So I think once we all see all these three things coming in tandem, maybe a month or 2 months or 3 months, we don't know. But then that is the time I think the money will start pouring in India. But I personally feel that this particular calendar year, I don't see that rupee getting very strong, at least in short term.
That's about the Indian rupee, but how do you look at the international markets really, Abhishek? Because you have the EU really didn't come out and do anything, and market has very low expectations from Bernanke or G20 for that matter in this week.
See, I was reading a very interesting article which was saying, Manisha, that first we have to look at the problem. We are trying to give them medicines, what is not working, and again, time and again, we are just trying with some kind of a bailout package, some kind of a funding. But the major concern is still untouched. If you look at what are these countries and what is the ECB actually doing in case of countries like Spain, Italy, they are actually asking them to reduce the budget. Now, if you look back and look at the history in 1996, 97, these countries were actually running small surpluses. Though they have huge public debt, the same time the budget problem is not so big. So if you take off a plane and you don't let with the full momentum, the plane will ultimately crash, and that's exactly what's happening in the Eurozone. The problem is not about deficit and tax. The problem is about credibility. And this credibility will only come once there is, like every central banks across the world, like we have in US, like we have in India, there should be a central bank like ECB which should just close their eyes and say, okay, fine, I am your godfather, I am going to pump in a lot of money, indefinitely. Now, why I am saying that is because anyways you are funding money. So why not come with a confidence? Now, if you are standing and say that I am going to pump in money indefinitely in the market, then what happens is automatically the investors from other countries like China, they will start coming in, and that is the time when these guys are going to buy the bonds of these countries. They might end up making some profits also. So ultimately, you know, what these guys did was initially they started increasing interest rates because inflation is a concern. Inflation is a concern. Now what they are doing is that inflation is now tamed. Now the growth is a concern. So ultimately, you know, if you work in that fashion, the problems won't get solved. So one thing is very important is create a credibility. Greece is gone, but at least save Spain, Italy, and other countries. So I think credibility is something that these guys have to really work upon, and that will only come out of political consensus about all these Eurozone economies.
You know, the concerns would continue for some time here, but just talking numbers right now, how do you look at the euro, the dollar index in the days to come?
See, euro is something that we are looking at 1.33 to be conservative, or maybe even more, because I don't think that these people are going to come up with a political consensus so easily. We have seen levels of 1.20, 1.18 in 2008, and today this time we are from 1.50, we have just come to 1.36. So I think there is still some more of at least 3 to 4 big figures in euro. In terms of dollar index, I think the euro hits 1.33, and other economies like GBP and all those starts going down. I think dollar index should move up to 79. You know, because now the incentive to invest in Japanese yen and Swiss has also come down. They are intervening. So the next best alternative is nothing but dollar. I personally would not like to invest in gold. Now gold is something, if you talk in the street, from 10 out of 10 people will say invest in gold. So something which is, there is no free lunch in the market, you know. So I don't think that gold at $1,800, $900 is something which is lucrative from my side. So I would probably invest in dollars for some more time, maybe till 79 or $80 index. Then probably I think the market will start correcting again.
All right, Abhishek, we'll let you go at that. Thank you so much for joining us with your view on all of those currencies. So Rupee could depreciate further, 48, 49, 50 also is something that Abhishek is not ruling out here. Look out for euro at 1.33 and dollar index for 79 in days to come, till of course you have seen some consolidation or something happens in the international markets. With that, it's a wrap on today's currency call. Thank you for watching.